everyone. Welcome to Redefine Tomorrow 2026. I'm Nat Chanakarn from SCB 10X. Joining me is Fabian Dori, Chief Investment Officer of Sygnum. Today's discussion is for anyone interested in RWA tokenization. We will be covering the trusted infra layers of tokenization, or the plumbing, that ensure security and investor confidence in RWA investment. Fabian, before we dive in, would you briefly introduce yourself and Sygnum?
With pleasure, and thanks for having me. It's a pleasure to have this discussion with you today. As you outlined, my name is Fabian Dori. I have the pleasure to act as the Chief Investment Officer at Sygnum, heading the Asset Management and Tokenization divisions, quite relevant for our discussion today. I'm with Sygnum since 2018, and before that have held different positions in on the traditional finance side, mostly on the asset management industry as well. Sygnum itself is a global digital asset banking group with both Swiss and Singapore heritage. We bridge traditional and future finance in a regulated and compliant way by providing professional and institutional investors with access to different digital asset services.
Yes, of course. Sygnum is a global digital asset bank and have multiple jurisdictions licenses, including Switzerland, Singapore, and Abu Dhabi. But today's focus will be on tokenization business at Sygnum. And when people hear about tokenization, they often think about, token issuance. But I think Sygnum covers more than that, from custody to investor servicing. So what role does Sygnum play in making tokenized asset work?
Yes, and as you outlined, I think Sygnum has been engaged with tokenization right from the start. Since 2019, actually, we have been building and further advancing a fully integrated institutional-grade tokenization platform that covers, so to say, the complete life cycle relevant for tokenized digital assets. That includes the asset structuring itself, so the legal, the regulatory design, etc. That also includes the technical issuance of the token, on which chain to launch it, with what features, but also then obviously the custody side, the trading side, the settlement side, which also bridges into secondary market features, and last but not least, the distribution. The platform we built is really designed to connect issuers, investors seamlessly. And given that in Switzerland we benefit from, right from the start, actually, from a very comprehensive and clear regulatory framework, we really built a platform that maintains the highest standards of regulatory compliance against that legal background, but also focuses obviously on the operational resilience and governance. Throughout the journey, we have now successfully tokenized various forms of real-world assets, be that art, collectibles, being it credit portfolios, but also, interestingly, crypto-native assets such as an NFT, for example.
Yeah, you're touching the full life cycle of tokenization. Yeah, and you mentioned about the private credit, right, and the NFT. But from your experience across like the tokenized asset investment space, from the private credit, money market funds, treasuries, real estate, equities, and so on, where do you see institutional readiness? And where do you think we're still in early days?
Yeah, that's an interesting topic because at the very beginning, I think the promise of tokenization was really to bring liquidity into illiquid assets. So at the very start, the focus was mostly on tokenizing real estate, illiquid assets per se, and so on. The journey has taken a bit of a different direction, in the sense that the largest adoption and the strongest tailwinds right now are much more on the liquid side, right? Ever since the passing of the Genius Act in the US last year, stable coins have been in focus, and with that then also tokenized money market funds, which benefit from a lot of tailwind. So I think that the institutional adoption right now is very much on the liquid side, be that, again, stable coins, money market funds, but ever more also swapping a bit more into securities such as tokenized stocks, tokenized funds as well. No?
Mm. In what kind of assets that you think is still in the early days, and what are the key factors to bring those RWA on chain?
Let me start with the second part of the question first. I think for real-world assets to be brought on chain in an efficient, effective, and scalable way, the preconditions are really a regulatory framework first, right? But then also the technical infrastructure needed for it in terms of custody, in terms of processes, but also the ecosystem around it, including the service providers, for example, for tokenized funds, then also paying agents, transfer agents, fund admins, custodians, which really are able to integrate with tokenized assets. So the preconditions are relatively clear. And that, so to say, then relates maybe also to the assets that have not yet that much of traction in terms of being tokenized and brought on chain, because to enable such a comprehensive ecosystem, a certain addressable market is needed, a certain liquidity is needed, and so on. And that is currently much more on the liquid side than on the illiquid side. So I would say where we still see a slower adoption is in the assets that have been in focus at the very beginning, be that real estate, be that other very illiquid parts of the market, which are still a bit struggling in being brought on chain, on scale, and then also in an efficient way.
Yeah, totally agree with you that the ecosystem has to be in place so that the market will be there and to be ready for the investment of real world asset tokenization. And I believe that you probably see some of the products coming to the pitch room and look nice in pitch room, right? But not really ready for the production. Can you share any interesting stories in the Sygnum pitch room, that is not hold up under institutional scrutiny?
Yeah, that's an interesting question. I think Sygnum is really about providing institutional and professional investors with access to credible, trusted products. So for us, it has always been important to exactly build and maintain the ecosystem, the infrastructure, the platforms that are relevant for assets that should be used in a productive sense and throughout the life cycle, not only for marketing purposes or, as you call it, for the pitch book, right, or for the pitch room. But I think you are able to detect such assets quite easily. So, for example, if they lack the integration with a value chain that would enable them to cover their life cycle in terms of being minted, in terms of being traded on a secondary market, in terms of supporting corporate actions in whatever form. So if such an ecosystem is lacking to an asset, then it's probably more for marketing purposes rather than for being productive. The same holds true for on the liquidity side, right? If it's a token which is illiquid, which lacks liquidity providers and the likes, or a proper market around it, then it's probably also not meant for the long term. So I think there are a few key elements that you can look out for in order to easily differentiate assets that are really embedded into a life cycle and into an ecosystem, and therefore for the long run, versus the ones which are maybe more here for a marketing purpose.
Mm-hmm. And is there any asset that you believe that is going to be like it's going to have the next adoption?
Right now, I very much see it on the most established ones. So clearly on stable coins, if you would want to call them tokenized assets. But then also, as I outlined on the tokenized money market fund side, I think where right now, as really a strong dynamics is on tokenizing stocks, tokenizing equities. We have seen Nasdaq, we have seen the ICE, we have seen the DTCC, all moving into the same direction exactly in order to allow and enable such an infrastructure and an ecosystem for equities stocks to be tokenized. So I would say that is a bit the next frontier which is developing after now stablecoins, tokenized money market funds being very much established. And then I guess the adoption probably moves up the illiquidity curve, so to say, covering other liquid, semi-liquid assets next, and then moving into the lesser liquid parts of the market itself until really the full ecosystem or the full set of assets is actually then tokenized.
Yeah, and I think you also mentioned about the integration into the system, right? So is the point where RWA is no longer a tokenization story, but a plumbing story. So I like to hear a story at Sygnum when it's clear that the hard problem is not just about building the product, but making the operating infrastructure work. Yeah, and what remains to be the challenges today?
Yeah, that's a great point you highlight, because I think the key difference between, so to say, a native blockchain token such as Bitcoin, Ethereum, etc., and a real-world asset tokenized product is very much related to the question you just raised. For the first part, for crypto assets, you set up your wallet, you start trading, you have custody, and so on. So that's a relatively straightforward process, right? But in order to have a real-world asset tokenized on-chain, and then also in the manner that it allows to be traded, custodized, and transferred in an institutional grade manner, it needs a full ecosystem around it. So the decisive point, as you outline, is not, I would say, not related to minting itself, so not to minting the token itself, but the challenge is really to be able to cover state changes in order to be able to have corporate actions such as transfers, redemptions, cash settlements, wallet changes, all of these elements covered, because they entail additional complexity. Typically, you would need to identify the eligible investors. You need to onboard them. You need to do the KYC checks. You need to whitelist wallets. You need to make sure that on-chain and potential off-chain records are in sync and so on. So I think there is the true challenge to which you were referring to.
Definitely, that you mentioned about the complexity of the operation, including the transfer, the redemption, right? So I think it all comes down to trust, right? And when institutional investor asks, like, can I actually trust this product? What do they really mean? Because I think there's a lot of integration underneath, from custody, from yield solution, because no one want to hold it passively anymore, and redemption and so on that you mentioned. Yeah, so just want to understand, what does trust mean?
Yeah, I agree what you just said. I think in the spirit a bit of what we discussed just before, trust in this context really means that trust is not, I would say, trust is not limited to one step in the value chain, right? Not custody per se, or the legal structure per se, etc. It's really about having all of those parts working together and working together seamlessly. Only then can trust in an institutional grade setup evolve. So it's not asking about whether the blockchain works. It's really asking whether the legal claim that the token is referring to is enforceable, whether the custody model really protects the asset. It's related to the question whether compliance is or compliance, so to say, is able to identify the right owner, whether the records reconcile, whether cash settlement works, and so on. So it's really about trust is not about the token per se, but trust is about having the ecosystem ready, having the life cycle and the value chain integrated, and having a control system around the token. And this really often goes deeper than one might think just from the outset, right? It starts with simple things such as, for example, having the smart contracts also audited. So having independently verified that the parts, the infrastructure parts, the coding, etc., that they are sound and safe, and also verified by an external party. That might, by the way, also relate to the underlying asset itself. Does it have an independent rating or not? And then also very much around custody, which we just mentioned before, in the case of, so to say, simple crypto assets, holding the private key to your wallet ensures custody. For real-world asset tokens, this is a bit different. Again, you need to have the key to the asset itself. You need to have the value chain around it with the legal register, with the eligible investors, and so on. So I think that is what trust really relates to. Having the full ecosystem, having the life cycle together, and having the key pieces independently verified and audited.
You touched one thing about the reporting and the information, right? Following up on that, I find that sometimes on-chain records and on-chain records and off-chain records, sometimes it doesn't sync. What do you do if this happen, if this discrepancy happen, and what is the source of truth?
Yeah, that's an important point. I think at Sygnum we have right from the start focused on really having an integrated platform that covers again the full life cycle in order to be able to cover such challenges. Our platform is also very much integrated with our core banking system itself. It incorporates daily reconciliation processes across the tokenization platform, including the core banking infrastructure, but also the underlying relevant blockchain networks. And this architecture ensures that we have end-to-end data integrity, but also the transparency on the operational processes and, so to say, the status of synchronization between on-chain and off-chain records. Now, if there is an issue, if there is a difference, if there is something that doesn't match, etc., then obviously, there are also manual steps involved in order to verify the root cause, in order to identify where the challenge is coming from and how to remediate the topics. So even though tokenization, smart contracts, etc., are very much about automating the value chain, if there are problems, there are also manual steps involved in order to address them and control them.
Mm-hmm. Actually, that leads to another question about automation, because AI automation is, a big topic for all the enterprise today, and AI definitely can reduce the friction, especially on the operation. For tokenization, I think from onboarding, reporting, and monitoring, it can touch across the value chain. So you mentioned about you have humans in the loop in some of the tasks, right? Because it's an important task for the stakeholders. But which tasks do you believe AI can be fully automated over the next few years at Sygnum?
Yes, maybe let me answer it in a more broader sense, not specifically for Sygnum, because I think we are one of the players, but relevant is more so to say how the technology per se can transform the industry and bring automation about. And here I think one of the key promises of tokenization, as you outlined, right, of tokenization and smart contract platform is really that large parts of the value chain related to the financial market infrastructure can be automated, and AI agents will be supportive in that process as well. So I think the clear aim is to have as much as automation as possible. At the same time, I think it's important to keep in mind that it's good to address the journey step by step and keep an eye on certain elements that need to be automated in a later stage. So where I clearly see potential for automation right from the start are, for example, on corporate actions, paying out of dividends as a simple example, for example, but then also keeping the record of the investors, the shareholders, etc. So these are the more easier parts. We can much more easier be automated. Elements that probably need more control, that need to be very cautiously dealt with is related to the finality of a transaction per se, right? Because once that is confirmed, once that is done, or it should only be confirmed and only be done once all relevant elements of the value chain are really in sync. So on and off chain ledgers, the investor is eligible, the valuation of the transaction, or the valuation at which the transaction happens is right, and so on, so that the finality of that transaction is really correct. I think that is, so to say, probably delegated to a later stage in the journey for automating the value chain.
Definitely, yeah. The balance between speed and control has to be there. And let's shift from operational side to the market side. Because I like to understand more about the secondary market today, as it's very crucial for investors, as you mentioned earlier, right? So how's the liquidity look like today, and how do you think it can be improved?
Yeah. Maybe the answer differs a bit depending on what element or what sector of the market you're looking at, right? Right now, stablecoins, tokenized money market funds, they are very liquidly tradable. There is, I would say, the tailwinds are really strong. You see additional investors and service providers, so to say, being onboarded and further strengthening the ecosystem. So there, it's clearly there. I would say for other for more specialized products, the liquidity is probably less strongly given because the addressable market is lower, the number of participants is lower. There might be no market maker or liquidity provider per se, and so on. So it really differs depending on the market sector you're looking at. But overall, I would say the ecosystem is advancing, and what clearly helps in bringing liquidity to the market is really having professional market makers, having the number of participants being increased so that more investors are on chain, use the infrastructure, do transactions, and so on, but also have additional marketplaces, right? So have additional investors that can be active on various marketplaces themselves, and obviously the underlying assets which should be liquid, or if liquid, can help as well.
Yeah, you mentioned about like the investors be active in the market. I'm not sure if it's if you agree with me on this, but I think sometimes liquidity is hard to build, partly because the market is still running on two parallel chains. The first one is like the permission network, and another one is like open public chain. So how do you see this two parallel rail works? Like what kind of use case match each type of rail, and will these two worlds can be, connect, and what need to be done for them to be connect and, reduce this fragmentation of liquidity?
Yeah, again, this is a very interesting point because similar, so to say, to where tokenization started off, namely tokenizing illiquid assets, and now the tailwind are much more on the liquid side. The same holds a bit true in relation to what you just outlined, right? At the very beginning, blockchain technology, DLT technology, etc., was very much about permissionless, decentralized infrastructure and so on. And now we clearly see what we are alluding to, namely that there is also a very strong ecosystem being built on permissioned, privacy-oriented chains and projects as well. I think what we could see is, so to say, a bipolar world, right? That permission networks are used for use cases where privacy is really necessary, and maybe the composability with DeFi platforms and other forms of decentralized applications are not necessarily in focus, and vice versa, that we have permissionless public chains really being used for easy integration with the full part of the ecosystem and different parts of the ecosystem. So again, I think permission networks, there are, and you meant, or permission networks such as the Canton network, but also the Ondo chain, there are very much about being the most regulatory friendly approaches to using blockchain technology to automate processes and bring assets on chain, very much offering the ability to limit participation to a dedicated, curated set of players, and also fully conduct KYC, AML procedures. On the other hand, permissionless blockchains, they're such as Ethereum, Solana, and others, they're very much considered for use cases where access to DeFi liquidity, the broader ecosystem, tokenization on different assets, etc., becomes much more relevant. So I think depending on the use case, different setups are chosen, but they might also grow a bit together into a situation where maybe permission networks are going to be used for the primary issuance of tokenized assets, tokenized real-world assets, and then permissionless chains are being used more for the secondary trading side and for the integration with DeFi protocols, different platforms, and the likes. Yeah, but I would really see a bipolar world emerging right now.
Yeah. Yeah, thank you for that. And we're coming up on time, so I'd like to end with something, forward-looking. So in a high level for this industry, how do you see the industry going in the next 12 months?
We are very much part of that ecosystem, so we might see the world a bit too rosy, but I'm really optimistic and really excited about the steps that are happening, because throughout, I mean, tokenization had a bit of a difficult start. Again, we started off 2019. We had in Switzerland the regulatory aspects ready, we had the technical aspects ready, and so on. But the institutional adoption has only gained true traction through 2025 and now through 2026. But right now, the tailwinds are very strong, right? With tokenized money market funds such as Beetle, but also others, most recently from Fidelity and so on, being launched and ever more being used. We see very much established exchanges such as Nasdaq, ICE, etc., taking up the next step of adoption, bringing stocks and equity on chain. We also see, so to say, what you refer to the plumbing, right? DTCC in the US embarking very much on the tokenized securities journey. So and we also see actually central banks testing tokenized assets. The Bank of International Settlement through Project Agora, here in Switzerland, the Swiss National Bank with Project Helvetia, etc. So I would say the tailwinds are very strong. And again, as I was a bit alluding to earlier, I would see the journey walking up, so to say, the illiquidity curve of the assets. We have seen very strong adoption on the stablecoin side. We have had now to say the proof points for tokenized money market funds. We are now seeing the tokenization of securities, equities, and step by step, I would expect the full financial market, financial assets to be tokenized and brought on chain.
Excellent, Fabian. Yeah, today we have covered a lot on the trusted layers and also like the future of tokenization. Thank you very much for joining us and sharing your insight, Fabian. Hope to have you back with us next time.
It was a pleasure. Thanks a lot.
Thank you.
Thank you. Bye-bye.